I'm William Grantham with Ichimoku Weather.com, and we're going to take a look at the sectors now that we're at the end of the month. We're going to do this video in 3 different parts. The first part's going to be sectors to their Ichimoku, and I'm going to go into a little bit of teaching mode here. So if you're very familiar with Ichimoku, you might want to skip this and move up to the second or third part. The second part is going to be sectors with a ratio to VTI. And then the third part is going to be sector with ratios to the other sectors. So we're going to use the ratio method to determine which sectors are outperforming which sectors in the third part. On screen, we can see the individual sectors and their Ichimoku charts, and from this we can see how they are doing compared to themselves, as well as a little bit of how they're doing compared to each other. We'll be able to tell more how they're doing compared to each other in the sector to the ratio of VTI and the sector to the ratio of sectors in the upcoming sections. Glancing at the overall landscape, everybody is above the black line, which is the 200-period simple moving average, and we do have green future clouds in all of them, except for maybe here in cyclical, where it looks like the cloud has gone a little bit thin, and it's hard to tell if it's green or red. The Chico span on this cyclical and technology is caught underneath old market action. However, industrials, it is above, same as basic materials, energy, defensive staples, a little bit here in healthcare, but it's starting to get caught. And then it is under in utilities, but then back above again in financials. So that kind of shows our leading sectors by where the Chico span is free and clear on these individual charts. Looking at the cloud itself, we can see financials does have a green cloud underneath it. And it's the only one that has 100% green cloud underneath it. Now let's take a closer look at the individual charts. Here on the bigger chart of cyclical, we can see that it did twist into red just a little bit, but has twisted back to green as market action has moved up just a little bit here in the last few weeks. The previous month, we were in a consolidation period. Then over the last month, we did come down a little bit, find support at the cloud, and then have moved up inside the cloud. The blue Tenkan-sen line and the red Kijun-sen line are both kissing right here, where they are both overlaid, moving in the same pattern. I've been asked many times if there is specific significance for this, and not really. It just is based upon the calculations. The Tenkan-sen looks back 9 periods, takes the highest high and the lowest low and divides it by 2, and the Kijun-sen looks back 26 periods and takes the highest high and lowest low and divides by 2. When they are running together, that means that the calculations are the same. So that means from the Kijun-sen's point of view, the highest high and lowest low have happened within the last 9 periods. And so it plots it exactly the same as the Tenkan-sen. The current line on the Kijun-sen has gone flat, which means that it has not had a new higher high or lower low over the last 26 periods, as the current candle is showing. It did provide resistance 3 days ago, support the day before, and then today it is providing support again. So it'll be interesting to see if the Kijun-sen can continue to provide support, trapping market price in between the top of the cloud and the red Kijun-sen line. If market price can get above the cloud, it will turn from resistance above into support below. The past Kijun-sen line, flat right here, provides a support level that we can carry forward, and we notice that it's at approximately the same level as the flat cloud in the future. So we do have a lot of support here at about $171. The flat line on the cloud itself is also support, so we have more support down here at $165. The lagging green line, which is market action, plotted 26 periods in the past, is under old market action, so that shows that we are not trending up or down at this point because this is trapped in between old market action and the top of the cloud. If market action can continue to move up, being able to pull the green line above old market action, then we could see a move to the upside. However, if market action goes down and challenges the bottom of the cloud and then falls underneath, and at the same time is able to pull the green lagging Chico span line down underneath the cloud, that will be an indication of a possible downtrend starting. Technology has been running flat a little bit from the first of the year. It came in with a blue Tenkan-sen above the red Kijun-sen with a bearish channel when the blue line is above the red line. That held for a little while, but then in March, we did see a consolidation and then a drop down where we peaked below the cloud, then went back up above, then down below, then back above, and then back down below, and now we're trying to get back above one more time. This consolidation action has been what has caused the thin red Kumo cloud right here, as well as the future cloud being thin as well. Thinner clouds are easier for price to break through. They do not hold as much weight as an idea for support or resistance. So whenever you see a thin cloud, that means there is a greater possibility of market action being able to pass through it one way or the other. Similar to cyclical, we do have a red flat Kijun-sen line with market action trying to get above the cloud. The cloud provided support couple of days here, and then right now the cloud is resistance, not allowing price to get up above. The blue Tenkan-sen line has gone flat as well, meaning again there's been no higher high or new lower low over the last 9 periods. So if we continue to see a consolidation sideways, these lines will continue to go flat. Now if they start dropping off old market action, we could see the line start to move up, only because old market action is being dropped out of the equation. The flat Kijun-sen line is our first line of support underneath. The previous flat area of the Kijun-sen is our second line of support at about 136. And then the bottom of the cloud being long and flat is another line of support at about 134. Our future cloud did pinch down but did not go red. It'll be interesting to see if market action can continue upwards and being able to keep this as a green cloud, or if market action comes down and challenges the bottom of the cloud and thus changing the future cloud from green into red. The industrial sector has been doing well since the start of the year. It came in a little bit flat, dipped into the cloud, and then had a Kumo breakout with the Tenkan-sen moving above the Kijun-sen after a few days after the breakout, creating a channel that held for quite a long ways until just recently when market action came down underneath the Kijun-sen line and then was able to pull the blue Tenkan-sen line down to the Kijun-sen line and then now underneath. So we do have a reverse channel here, which means it is a bearish channel that we have started with the red Kijun-sen line being above the blue Tenkan-sen line. We do have a nice formation with the lagging green line, the Chico span, being above market action, not even coming close to touching, as we've seen this bullish pattern continue to move up, and with the space between the Kijun-sen line and old market action, that shows that we did have a strong positive bullish trend for quite a ways. The green cloud is also moving up, with it getting thicker for a little bit here. It's only getting thin at the last few weeks, and then the 200 period simple moving average is in a parallel to the cloud itself and is far below the cloud, showing that we do have upward momentum from the 200 period simple moving averages point of view. So looking at the industrial sector to its individual chart, we do see a lot of bullishness going on here, except for the flip of the Tenkan-sen being below the Kijun-sen. The basic materials sector came into the year going sideways quite a bit, causing a flat Kumo cloud here for a while, but then we did have a Kumo breakout right before it, where price action was pretty much rode up a little bit on the blue Tenkan-sen line, fell underneath, found support at the Kijun-sen, and then got back above the blue line and rode it pretty much ever since, dipping below it just a little bit here lately, but is currently finding support at the flat Tenkan-sen line, and we do have the red Kijun-sen underneath it, so that means that our bullish channel is still positive to the upside. We have traded within this trading zone over the last month, so that's causing the top of the cloud to start to flatten out, as well as the bottom of the cloud to create a long flat period that will also provide support for us if we do come down and challenge the cloud and move into it in the coming months. The blue line being above the red line, of course, is a bullish channel. Seeing it be a bullish channel for this long shows momentum to the upside. Our lagging green line is starting to go a little bit flat as market action has consolidated here, and it's right in line with coming up. So if we don't start moving higher, we could see the lagging green line starting to get mired or anchored into old market action, and that could slow down the upper momentum as we see the old memories of past trades possibly pulling down market action. The red Kijun-sen line is sloped up slightly. As it drops out old market action, it will continue to slope up. So this is a bullish momentum indicator as we see the red line on the Kijun-sen being sloped. It's nicer when it has a stronger slope like this. That shows a very strong bullish action. But even having a small slope like this does show an upward tendency as we move forward. The energy sector, which has been a laggard over the last year, is starting to do a little bit better this year. However, it did pull down into the cloud at the end of last month. And then throughout this month, we did have a nice rise and then a sideward movement as market action fell down into the channel below the blue Tenkan-sen line and above the red Kijun-sen line. The sideways action of last month produced a red future Kumo cloud that's fairly thin, that twists here and here. And so the twist here and the thinness here could be a place where market action could fall through if energy starts to find a lot more bullishness within itself. We don't see quite the same parallel of the 200-period simple moving average being below the cloud. The cloud itself is somewhat flat as the 200-period average is starting to catch up. The future cloud is starting to get a little bit thicker. We do have a long flat B line here, as we also have a flat line here with the Kijinsen. So this area right here is going to provide hopefully a lot of support underneath for market action if it does tend to come down and challenge that at around $51. Staples did show enough weakness back in early March, enough to come below the cloud and to challenge the 200-period simple moving average, which did provide support enough to be able to help the line, enough to be able to help market action get back above the 200-period simple moving average on this nice big green cloud. And then it was able to get above the blue Tenkan-sen and the red Kijinsen. And we moved forward enough for the blue Tenkan-sen to cross above the red Kijinsen, which was a nice sign of bullishness moving forward. This opened up a bullish channel that has been in play and is still in play today. Taking a look at the interaction between market action and the two lines, we can see that we had a nice run on top of the blue Tenkan-sen line here for quite a ways. We came down into the channel and found support at the Kijinsen, but we didn't even touch it. We then were able to get back above, ride the blue line again, a couple of trading days down underneath the red Kijinsen line, and then back above, another day underneath, touched it, but then opened and closed above the red Kijinsen line. So it's still showing some bullishness going forward. And then we moved up, and right now we're riding the blue line again. Support underneath us is the future cloud top right here, the red Kijinsen line, and then the blue Tenkan-sen line right here is also going to be support. So we do have a lot of support in between 69.5 and 70.5. The black 200-period simple moving average has moved close enough that it is clipping the bottom of the cloud here. So it's providing support along with the bottom of the cloud, but being so close to the cloud shows that this does not have as much bullish momentum as we saw in some of the other charts where the distance between the bottom of the cloud and the 200-period moving average was quite further away from the cloud to the 200-period simple moving average line. So that shows that we do have less momentum going on here in Staples. Healthcare is showing just a little bit more momentum with the black 200-period simple moving average being below the cloud with a little bit more space. And so that does show that we do have a little bit more upper momentum, as well as the cloud turning from red back into green and then growing and getting thicker. And so that upward movement here caused the green cloud in the future to get thick and move up and provide us with a support zone underneath us at the top of the cloud and at the bottom of the cloud. This is our support zone in the future as market action continues to move forward. We have seen a bit of consolidation over the last few days, and that's shown by the thinning of the gap between the blue line and the red line. It's moving down very close right here. It'll be interesting to see if it closes and if the blue line moves underneath the red line. If we do, that could be a sign to movement towards the downside. If we do see the blue line start to separate from the red line, then that's an indication that market action has been moving up enough to be able to redraw the line and further separate it from the Kijinsen. Our lagging green line, the Chico span, has found itself touching market action here, and that could create a bit of an anchor. And so what that's doing is it's showing us that our current price plotted 26 periods in the past is currently touching old market action 26 periods in the past. So that's showing us that our momentum to the upside has somewhat slowed. When the lagging green line is above old market action, it's showing that current market price is above market action of 26 periods in the past. Nothing mystical about this. It's just showing us some clues to what happened with old market action to help us make decisions. When we see that the lagging green line is starting to get caught in old market action, it's showing us that our upward movement has stalled enough that over the last 26 days, we have not moved up enough for the lagging green line to be able to clear above old market action. So that could be an indication of the trend, the momentum starting to stall. This is the chart for utilities. You can see it's a lot more messy with market action coming into the year underneath the cloud, not being able to get above, traded under the 200-period simple moving average for quite a ways. And then we did see market action just exploding up above the cloud and above all three lines of the 200-period simple moving average, the red Kijun-sen, the blue Tenkan-sen, and then we also have the blue Tenkan-sen crossing above the red Kijun-sen right here, right before we had this nice Kumo breakout that started a nice bullish channel up to the top. But it didn't have enough momentum to continue through the end of last month, and we started to see a fall and consolidation with some lower lows and some lower highs as we came in and we're now challenging the top of the cloud. We've moved inside the cloud, and so that means the top of the cloud is now resistance above, as well as the Tenkan-sen and the Kijun-sen being resistance above us as well. Notice that the blue line is below the red line. That means we are in a bearish channel as shown by these two lines. The cloud itself is nice and thick here thanks to the upward movement of a few months ago. However, we are starting to thin, and we do have support here at the flat line area at about 64.75 cents, all the way down to $63. We do also have the green Chico span lagging underneath old market action and underneath the blue Tenkan-sen, and that can provide a lot of anchoring and stalling of our momentum up. So right now, with this line being underneath old market action and the blue Tenkan-sen, it's showing us that current market action has moved sideways over the last 26 periods, enough for the lagging green line to fall way underneath old market action. The red Kijun-sen line has gone flat here, but then it steps down and goes flat again. So F market action continues to move sideways. We could see old market action being dropped out of the calculation and seeing the red Kijun-sen line step down some more. If market action goes sideways enough that the blue line continues to go flat and doesn't move down, then we could see the blue line cross above the red line, and that would be our first signal based upon these parts of the indicator that a turnaround is in place. However, if we do see the blue line staying underneath the red line as we move in through the cloud, then that is an indication that we're still in a bearish down channel as shown by the Kijun-sen and the Tenkan-sen. As we saw in the group photo, financials had the long green cloud. Here we can see that we've been in the green cloud since the first of the year. At the middle part of December of last year, we had a nice little Kumo twist from the red into the green, and we pretty much have been riding the top of the cloud ever since. We do have a few times where the Tenkan-sen has crossed below the Kijun-sen and then crossed back, so this could be a signal to get into the trade. It depends on what your trading method is, what your trading plan has for you, but we did see that it fell underneath here, riding actually parallel to the red line, and I call that kissing when the blue line and the red line are at the same level. It happened here, and then it happened again, had a couple of kisses in a row before we opened up and started this nice bullish channel where market action rode above the blue line for a ways, fell underneath, but notice that it didn't come down and touch. We're always looking to see how old market action reacts to the lines. Does it pass through? If it passes through, does it touch? Does it ride above? How much of a cushion does it ride above? So right here we can see it's riding above with a pretty big cushion. That's showing a lot of momentum as price is moving up through the end of last month. And then throughout this month, we have been moving sideways enough that the red Kijun-sen line has gone flat for quite a ways, has stair-stepped up a little bit because old market action has dropped out of the calculation. However, we have been moving up for the last week or so above the Tenkan-sen, and that is going to help the blue Tenkan-sen line to continue to have an upward trajectory. As some of this old market action drops out, we should see the blue Tenkan-sen line move up as well. Lots of bullishness going on with this chart. We do have the 200-period simple moving average in a nice parallel stance underneath the cloud itself. The blue and the red lines are above the cloud and are not touched. So that's showing a lot of momentum to the upside as well since the beginning of the year. And we are moving into a little bit of a thinning cloud here and then flattening cloud here. So whenever you see the cloud go thin, whenever you see the cloud go flat, that is showing that is an indication showing us of consolidation. So we're seeing the flat line here on the bottom of the cloud and the flatness here on the top of the cloud. Those are also support lines underneath us. If market action does come down and start to challenge the cloud, we do have a little bit of support going on here at 37 and at 35.75. The communications sector and the real estate sector are not part of traditional sector rotation, so I don't show them in my 9 grid that I've been watching for years. But let's go ahead and take a look at them because they're very important sectors to understand what's going on as well. We'll use XLC for our communication sector, and we can see that it has been doing well since the start of the year as well. In the mid-December, we had a Kumo twist from the red into the green, and we've been in a green candle ever since. However, market action has gotten very close to the cloud several times, and then it even dipped into the cloud here. So it doesn't have quite as much momentum as the financial sector did based upon looking at these elements of Ichimoku. We also see that the red line came down and just barely, I don't even know, we'd have to zoom in to see if that touched or not. It was right at the top of the cloud. We've also seen a lot of touching with the blue line and the red line running at the same levels. Starting here at the first of the year for quite a ways, the blue and the red line held together. The upward movement of price action did allow the blue line to separate from the red line, creating a nice bullish channel here that ran for quite a ways, got thin, lost it, came down, and we had kissing lines again, but the red line never really moved above the blue line too much here, and then we did go up again, riding the blue line up until we had weakness came through enough to pull the blue line below the red line, creating a bearish channel that was open for a little bit, but market action found support at the top of the cloud, bounced off it, went rocketing through both the red line and the blue line up enough to create this kissing action again, where the blue line is now up at the same level as the red line. The lagging green line is free and clear above old market action as well as the other indicator lines and has a little bit of market action here in front of it that could stall it, but it's not very thick. If market action continues to go sideways, there's not much old price action here that could stall our upward movement from the perspective of the green Chico span. The cloud itself has been doing a nice little stair-step pattern here as it's been moving up, going flat and then up, then flat, then up, and then we're flat right now. Could we go up? That's what the past has been doing. We're going to expect that until it doesn't. We have no reason to think that it won't do that. It depends on the overall market and then how communications does within the overall market. But right now we do have a nice upward movement moving above the top of the cloud. So we do have support at the top of the cloud at around $77 all the way down to $75. So this is our zone of support underneath. It's a moving zone of support. And it'll be interesting to see if market action does come down and challenge it like here. And if it bounces off, then we know that it was absolutely support down below. I use the Vanguard ETF VNQ for my real estate ETF overall. And we can see that we did have a little bit of a red Kumo twist here. But other than that, it's had pretty much a nice green cloud throughout the year. The 200 period simple moving average is below the green cloud for a bit of a space between. We did come close to touching here, but right now we are starting to see separate, which shows that market action has been skyrocketing up enough to be able to pull the cloud away from the 200 period simple moving average, which does show strong momentum to the upside. We came into the start of the year with the bottom of the cloud providing support for 1, 2, 3, 4, 5, 6 days, and that was enough to be able to allow the buyers to be able to get the market price up above the blue Tenkan-sen and the red Kijun-sen above the top of the cloud and create a nice bullish channel moving up before it stalled and market action came down and what? Found support at the cloud. Market action came down with these long wicking bottoms, and they were able to bounce off the top of the cloud on this one day and then get back above both the red line and the blue line and move into this consolidation pattern here as shown by the flat red line. The flat red line is showing us that market action consolidated for a while and didn't continue up. So when we see the red line angling up, we know that that's not consolidation. We know that there was upward movement. And of course, we can see that by just looking at market action. Ichimoku is just here to help us understand what has happened with market action and be able to determine possibilities of support and resistance. So right now, we do see a bit of a cushion above the blue Tenkan-sen as market action rides up, touches the blue line here a little bit, gets close, but then for quite a ways is moving way above the blue line until it stalls, comes down under the blue line, and it's not able to get above it enough. The blue line goes flat. We see market action crossing beneath the red and the blue, and then this stays down here long enough for the blue line to cross underneath the red line, causing this little baby bear channel triangle here that didn't last but for a couple of days before market action rocketing up was able to pull the blue line above the red line, and we do have the beginning of a bullish channel here again as we see market action continuing to come up. We are in a little doji of indecision, so we'll have to see what goes on over the first part of next month to see if market action will continue to move up, but we do have a higher high over the last high here at the end of last month. The Chico span is free and clear. It's currently above old market action. If market action continues to move up, then it will clear this and it won't become an anchor. However, if market action goes sideways or pulls down a little bit, we could see the Chico span start to get caught in old market action, which is an indication that our upward movement, our momentum is stalling a little bit. We can see down here that it did stall a little bit as it moved into market action, but ever since then, the green line has been above old market action, showing that we do have momentum to the upside throughout most of the year. Our future cloud is getting a little bit smaller here. However, it is a nice, big, thick cloud, having a bit of a flat line here, but then moving up and creating a new flat line that's still small here at looks like around 94.25 And so we have a nice zone of support underneath us from $94 up to $98. And so this concludes looking at the individual sectors to their individual Ichimokus. I went through a bunch of stuff here, but I'm not sure if I covered what you wanted to hear. If you have any questions on Ichimoku, please be sure to go ahead and comment in the comment section, and I'll get back to you and answer your questions the best I can. Now we are taking a look at the sectors and their ratio to VTI. VTI is an ETF that has thousands of different stocks in it, and it is quite often used as the standard in the industry for understanding if the market's going up or down. You can also use the Dow Jones Industrial Average, DIA. You can look at the NASDAQ QQQ, and you can also look at the S&P 500 SPY. Besides looking at those three, I also look at VTI, and I use VTI for my main line for the overall market. And then we take a look at each individual stock and its ratio to VTI. So it's taking the stock chart and dividing it by VTI. I have the stock first and then VTI, so that means that if the chart shows it's going up, it shows the stock is doing better than VTI. If the chart shows that the market action is going down, it is showing that VTI is doing better than the stock. So taking a look at cyclical here, we can see that it is moving down. So that means that VTI is doing better than cyclical at this particular time. So this is a ratio chart, so it's not an individual stock chart. It's the ratio between the two charts. So it has a little bit different meaning than just looking at the Ichimoku for the individual chart. If you'll remember, the individual chart for cyclical was moving up and had just barely moved inside the cloud. However, VTI is doing better, so that's showing that the sector, the cyclical sector, is not doing well versus the overall market itself. So we can this shows that cyclicals is not doing as good as the overall market. So if you had your choice of going into VTI or the cyclical ETF, then going into VTI would have been doing better over the last year. You can see the same thing happening with technology. Even though its individual stock to its Ichimoku did show promising outlook, the market action itself was not strong enough to be outpacing the overall market. And we can see this here in technology as the first of the year, it wasn't even able to get up above the cloud for very much. Came up above the cloud here a little bit, got stalled at the 200-period simple moving average, and right now is below the cloud with a red future cloud. The blue line is below the red line, and the lagging span is underneath everything. That means it's free and clear to the downside. So that's showing lots of weakness still in technology as we move forward into June. Industrials is looking a little opposite. We can see that after February, we had a nice bottoming pattern, and then industrials moving into March started outperforming VTI, moving up above the cloud, came down and found support at the top of the cloud, and then moving up continuously until where we currently are at the beginning here of June. Our green cloud is nice, and it's getting a little bit thin here a little bit, but it is still green here in the future. We do have a lagging line that is free and clear above old market action, and the blue line is above the red line. So we do have lots of bullishness on industrials versus VTI. Somewhat the same going on over here with basic materials. So we can see a rotation out of cyclical, out of technology, into industrials, into basic materials. We can see basic materials also had this bottoming pattern here in February, came up above the cloud, stalled for a little bit through March, and then in April got a little bit of a push up, but then in May really started outperforming the overall market until about the last couple of weeks, and that's where we see market action coming down into the channel in between the blue Tenkan-sen and the red Kijun-sen. So this bullish channel has been open for a while, about at the beginning of May, and then now it's starting to show a little bit of weakness towards the overall market. So basic materials was outperforming VTI for quite a while, but right now it's cooling off a little bit. Is it cooling off and going to start moving down, or is it cooling off, consolidating, and getting ready to move up? The next month we'll have to watch it and see. Oil and gas actually started outperforming the overall market back in December, moving up above the cloud versus VTI, which is a great sign for energy, which had been lagging for so long. It got up to the 200-period simple moving average, was not able to move above, came back down, found support at the cloud, went above the 200, wasn't able to stay above, came down, found support at the top of the cloud, and then energy started taking off again mid-February, same place we saw that basic materials and industrial starting to take off. This is where we started to see market rotation moving out of some of the others and into these more defensive style sectors. Then market action and energy continued to outperform VTI all the way up until March, and then at March, it started falling off a little bit, having some problems in oil and some of the other industries within energy, enough to drive it down underneath the cloud, but it didn't challenge the 200-period simple moving average. Still a big gap here. And then at the beginning of May, was able to start regaining on VTI, moving up above the cloud. And then where we are today, it's come back down into this channel. We do have a little bit of a red cloud in front of us, Kumo twisting into a green cloud, and we'll have to see if market action can stay above the cloud here on this ratio chart of energy to VTI. Now, this one surprises me. I would have thought defensive staples, consumer goods, would have been doing a little bit more, having better rotation into it as people are seeking to find more defensive areas. However, they have not been, as shown by this ratio chart. The rotation into the defensive areas has been in industrials, basic, and energy and financials, but has not benefited staples yet. We did see at March a bit of a bottoming pattern, and then here in May, we came down and bottomed again. But just now, we are moving up a little bit, challenging VTI, getting a little bit ahead of market action in VTI. However, over most of the month, it has gone sideways and down a bit. We do have a very thin cloud in front of us. That's an indication of sideways action. Whenever you have lots of Kumo twists in the future, it's almost a signal not to even trade. And we do have 2 Kumo twists here in the future and a thin cloud. So I don't know if I'd be ready to get into staples yet. I would like to see it outperform VTI just a little bit more, but this will be one to watch to see if it does start to come up and then challenge the 200-period simple moving average, which has been on just a down run here, showing that staples has been way underperforming VTI. And the same thing with healthcare. Looking at the 200-period simple moving average, just roller coastering down on top of a cloud that has just been red, red, red. We have gone into a sideways movement here where it's been performing about the same as VTI, was able to get up above it a little bit and then come down. So Healthcare has been doing about the same as what VTI has been doing, but it certainly has not been outperforming it, although recently it has not been underperforming it. So we have gotten above the cloud here on the ratio chart, so it will be interesting to see if healthcare is going to start outperforming VTI or if it's going to continue to underperform it and then move back down below the ratio cloud formation here. Utilities, same way. It's been under pressure for a long time. The ratio between utilities and VTI, utilities just cannot outperform VTI. It started to here a little bit back in October, but quickly found the top of the 200 period simple moving average. Looks like it just capped that market action, and it came falling down underneath the cloud into a bearish channel for quite a ways. Came down and bottomed in March, came up and challenged the cloud, got caught inside for quite a ways, moved up above, was not able to stay above, was not able to outperform VTI for very long, started underperforming enough that it fell down into the cloud, went into this consolidation pattern, which has caused the future cloud to get thin and even Kumo twist into red. And so we are currently underneath the cloud here on utilities versus VTI, and the 200 period simple moving average is quite a bit above us. And so we are seeing quite a bit of weakness in utilities. So we are not seeing a rotation of any money flowing into utilities versus VTI at this time. However, on financials, we are. It started off back in November, finding a bottom, getting above the cloud, came up and tried to get above the 200 simple moving average for quite a ways. Look at this. It just looks like that 200 simple moving average just held the price down. However, this is a ratio chart, so you can't really say that it was old market memory that was causing it. It's just an indication of what the calculations were doing. But financials was not able to outperform VTI for the month of December until finally, starting at the first of the year, financials started outperforming VTI. And in January, had a major push up through the first part of the month and then fell down. And then again in February, at our bottom, we see that once again, we did start to see a push into financials. Money started flowing out of other stocks and other sectors and started flowing into financials, industrials, basic materials. And we can see that reflected here in the ratio chart between XLF and VTI as market action rode the top of the cloud. And then at the end of February had a major push up and then consolidated for a while, came down, found the bottom of the cloud of support, and then quickly at the end of April and through the 1st of May, pushed up hard, and that's where we find ourselves today in a consolidation zone right here, fluctuating right around the Tenkan-sen. Have not come down and challenged the Kijun-sen yet. Now, as we start dropping off old market action out of the calculation for the Kijun-sen could start to angle up and get closer to us, and that could pinch a little bit. And if we see market action go down below the red Kijun-sen, then we might start to see financials show some weakness. But right now, market action on financials is about the same as VTI. On these ratio charts, when you see them trading sideways like this, that means that the underlying to the overlying are doing about the same thing. So that means that throughout the month of May, we have seen financials doing approximately the same as VTI. So if you're looking at VTI and you're noticing it going up, and you're looking at financials individual chart and you notice it's going up, then you can see that financials is not outpacing the amount of going up as VTI. And so our sector ratio to VTI gives us a little bit more insight than just the sector to its individual Ichimoku cloud chart. So by looking at the ratio, we start to see if the sector itself is outperforming the overall market, and the overall market being used as VTI. Next, we're going to take a look at the individual sectors and their ratio to the other sectors to try to determine which sector is outperforming other sectors. We're going to use stockcharts.com to do our ratio between sectors. So this is looking at one sector and its ratio to another sector. I've already placed the order, so I'll take you down my order that I've got. So we're going to start with financials versus materials. So this is showing financials going up And that means that financials are doing good. And then when it's going down, that means that materials are doing better. Here over the last month, financials have been going up just a little bit. We ended with financials being almost coming out of the top of the cloud, and we do have the blue Tenkan-sen above the red Kijun-sen. The chart over here is exactly the opposite, taking a look at materials to the ratio of finances. So that means that when it's going down, finances are doing better, and when it's going up, basic materials are doing better. And we can see over the last couple of weeks, it's kind of looks like it's going down, and that means that finances are doing a little bit better. We are in the middle of a cloud, and we are underneath both the blue and the red lines. So that means that right now, finances are doing marginally better than materials. So we have financials, materials, and then energy. So this is looking at materials versus energy. When it is going up, materials are doing better. When it's going down, energy is going better. So recently we were going up with materials doing better, came down a little bit with energy doing better, and then it's been kind of sideways, but we are above the cloud. So that's going to put us with a medium to a long-term trend with basic materials doing better than energy. Here we have the opposite chart, and we can show that we are underneath the cloud, just barely passing into the cloud. And that's showing us that looking at the two charts, it looks like materials is doing a little bit better than energy at this point. Next, we have energy to industrials. And so right now on this chart, going up means energy is doing better. And when it's going down, industrials are doing better. So through May, we had both situations happening. At the very beginning, we had energy doing better. Then the last couple of weeks, we had industrials doing better. However, right here on the energy leading charts, we do have the Tenkan-sen above the Kijun-sen. And on the flip chart, we have the Kijun-sen above the Tenkan-sen. So we're going to make the call for the overall trend on these two charts for energy to be above industrials. After industrials, we have the real estate ETF. And so right now we are above the cloud on industrials over the real estate, and on the real estate over industrials, we are underneath the cloud just barely. So it's a pretty tight call here as well. We did go up having industrials doing better and then coming down having real estate doing better at the end of the month. However, with the previous month's work and where the cloud lies, we are going to say our medium to long-term trend is with industrials doing better than real estate, even though on the very short-term last 2-week trend, real estate is outpacing industrials. So right now they are neck and neck when you're looking at them through a sector ratio situation. This ratio combination is a little bit easier to see. We have real estate versus communication services. And on the first chart, we can see that we are well above the cloud. And on the second chart, we're well underneath the cloud. We also have the blue Tenkan-sen above the red Kijun-sen. And here we have the blue Tenkan-sen below the red Kijun-sen. So this is obviously showing that real estate is outperforming communications at this time. Next, after the communications services sector, we have the healthcare sector. So right now we are above the cloud in the ratio between the two, showing that communications is outperforming the healthcare sector. And on the flip chart, we can see that we are down below the cloud a little bit here, showing that the healthcare sector is not doing as well as communications on this second chart. And so this first chart shows that with this last little push up here, a nice big run shows that we do have on the short term and the medium term and the long term, we do have communication services outperforming healthcare. These charts are showing the healthcare versus staples. I like showing both charts, even for myself when I'm trying to determine which one's doing better. It just makes it a little bit easier to differentiate. So here we can see that we are above the cloud. Here we are below the cloud. So this is showing that we do have healthcare that is outperforming consumer staples. After consumer staples, we have utilities. This one's very easy to see. We have had a nice run up over the last month. That means that over the last month, that consumer staples has been outperforming utilities quite handily. And here it's showing the drop, showing that utilities was not able to outperform staples on the flip chart on these ratio charts. Next, after utilities, we have technology, which has been doing not as good as it usually does in the overall market itself. Now, on the last week here, on the last month, we did have a run-up of utilities doing better and then a run down, meaning that technology was doing better. However, we are above the cloud, and we do have the blue and the red lines kissing at the same points. We're over here on the flip chart of technology versus utilities. We are inside the cloud, and we do have the blue Tenkan-sen line being below the red Kijun-sen line, which shows this chart is just a little bit stronger, and it is showing that utilities is outperforming technology at this time. And here we are on our final ratio of sectors versus sectors, and we have technology versus the consumer discretionary cyclicals. And on this chart, we are up inside the cloud, and we are inside the cloud this one as well. However, on this chart, we do have the blue above the red. On this chart, we do have the red above the blue. So they're fairly even as they're fighting it out to see who has superiority over each other. But right now, technology is edging out cyclicals just barely, and looking at the ratio between the two different ETFs. So that gives us an order of financials, materials, energy, industrials, real estate, communications, healthcare, staples, utilities, technology, and then cyclicals. Now, this will change throughout the month, and so we'll see how we're doing by mid-month, and then at the end of the month, we'll do another video and see how we're doing from there. If you are interested in knowing about that video when it comes out, you can sign up in the form below, and I will send you an email on just this video alone. I won't spam you with anything else other than letting you know when this next video is out. So I'm William Grantham with IchimokuWeather.com, and we are using ratio charts on the sectors to determine which sectors are outperforming which other sectors and how we have money flow at this current time. So we are tending to go into more of the defensive areas than we are the growth areas. So we are looking for value at this time. Money's flowing into value and still flowing out of growth, and we'll be watching to see if that changes in the near future.